Welcome everybody to How to Navigate a Crypto Fork. My name is Jordan Pilkington.
I'm Richard Johnson. We're partners at CC Mutual. You can find more information at ccmutual.com.
So Richard, people that are coming to this video, they're probably going to ask, what is a fork and why is something like this happening on the blockchain?
So you've seen over the last couple of years that there has been a fork in Bitcoin, in Ethereum, and a lot of these other crypto assets as well. Most of the time it's actually an upgrade to the underlying technology. So as this slide represents, you have Bitcoin, the original or the genesis. You have Bitcoin Gold highlighted. Bitcoin Gold was actually implemented to make mining more efficient and also actually making money for the people that are in mining. So if you have somebody at home that has set up a rig that is actually making you money, Bitcoin Gold is actually to get back into making that beneficial for the miners. Bitcoin Cash was actually developed to be more for transactions. A lot of people complained that Bitcoin was slow. It took a lot of time to actually verify the transactions. Some of the fees actually started to rise as well as Bitcoin became more popular. And then SegWit 2x, which was actually supposed to happen today, which may still happen in the future, is actually going to be something that is proposed to make the technology better, increasing the block size, but to overall make it so that people can adopt it on a more global scale.
Okay, so I've been asked this question. I've even wondered it myself. Like, people ask me, is it kind of like a stock split? So it doesn't really sound like that, right? It's more of like an upgrade, a split off.
It really depends on how it plays out. So for instance, with this SegWit 2x example, there was going to be an actual upgrade to the technology. But how Bitcoin was developed, you have to have a consensus. So you'd have to actually have the masses agree to this implementation, whether it's an upgrade to the software or something that they want to actually include to make things better for the entire ecosystem. What happens though is if you don't get enough people to agree to that quote unquote upgrade, then like a stock split like you'd mentioned earlier happens. So in this case, there could possibly be everybody agrees to the upgrade.
That sounds very unlikely.
It is. I mean, essentially you would need 95 to 100% agreement on what is going to happen. This technology is going to do this in the future. And to your point, it's very, very hard to get that many people to agree. So in that case, what happens is actually something splits off and a new chain is created.
Okay, very interesting. Okay, so how do I decide like if this actually affects me? Like, is this upcoming fork important to me?
So it's going to be based on a few things. For most people that are actually involved in crypto right now, they're going to hold not only Bitcoin, but some few of the other altcoins as well. That could be Ether, it could be Litecoin, Monero, whatever those are. What happens is you're going to see things are very highly correlated right now. Wherever Bitcoin moves, everything kind of moves along with it, right? It's the genesis, it's kind of the backbone of the ecosystem right now. So if something is going to affect Bitcoin, it's probably going to affect you if you have other assets as well. So for instance, if Bitcoin were actually going to split or implement an update, you're going to see the rise in price because either one, people are going to be behind it and they want to see Bitcoin do well, but then sometimes that actually takes money out of other assets. So if people have been actively investing in Ether, they may move their money over to Bitcoin to actually take advantage of, say, that rise in value. So you could actually see a depression in the price of Ethereum, or Ether, sorry. So it could affect you. Honestly, if you're involved in this space and not just reading about it passively, anytime there is some sort of update or fork or a mention of a fork, it will affect you.
What if I'm not in the crypto space? It sounds like there is money to be made here. So if I hear about an upcoming fork, should I get involved?
I do advise most people to get involved to a certain extent. The best thing you could probably do is actually do dollar cost averaging. That's where you're actually putting 100, 200, whatever you can really afford into the crypto space to actually just take advantage of the optimism of the ecosystem, right? I'm a big believer in it. Jordan, you're a big believer in it as well. We really think like this is going to change how we operate on a daily basis. So if you can only just put in $100 in Bitcoin, you're going to see that rise over time for the foreseeable future. So I would actually get involved and know that if it's actually something that is going to improve the system, then you definitely want to get involved, because let's say whatever's going to happen to Bitcoin or Ether or Litecoin is actually going to be an improvement. That should make the price actually go up in value. So at this point, if you hear news, there's the old saying, buy on the rumor, sell on the news. I would actually get in if there is a rumor of some sort of update, or if a huge company or government is actually going to start implementing cryptocurrency for something. It's definitely the time to get in.
Okay, I'm sold. So what do I need to do to get prepared?
So it really depends on where you're at right now. Are you on the sidelines? If you're on the sidelines, start investing. Open up an account and start, actually buying these cryptocurrencies. If you have a ledger like there on the left, that hardware wallet, you may have Bitcoin or Ether actually stored on that. What you want to do is actually just leave it alone, and you're going to take care. For the most part, Ledger or Trezor is actually going to help you take care of that split. There may be some manual things that you'll have to do afterwards, but for the most part, you're going to be credited for whatever you do already have. For instance, if you have 10 Bitcoin, if the fork isn't fully implemented, if there is some sort of divide, it's not a full consensus, you're going to be credited whatever that implementation or the other currency is going to be. That is the case, what happened with Bitcoin Cash. There wasn't a full adoption, so there was a split off. And if you had 10 Bitcoins, after the split happened, you had 10 Bitcoin Cash. And those are going to be at varying actual degrees of value. So for instance, at that time, Bitcoin was around $4,000, and then Bitcoin Cash went as high as $1,200. So if you have a ledger, just leave it, and then do the manual actual split afterwards and take advantage of that split. If you have something more conventional, if your money is on an exchange like GDAX or Bittrex, then for the most part, you'll actually want to be up to date on their blogs. They're going to release updates on what their stance is on the actual proposal. For instance, with GDAX, they didn't actually honor Bitcoin Cash initially. So you did see some money actually move out of GDAX onto some other exchanges or platforms that said they were going to immediately honor Bitcoin Cash. GDAX then came out with a statement that they are going to honor Bitcoin Cash in 2018. So same sort of scenario though. If you had 10 Bitcoin, they were going to credit you with 10 Bitcoin Cash. So you're going to see that. Bittrex was a little bit different. If you had Bitcoin on Bittrex, you actually were credited that other Bitcoin Cash almost immediately. I think within 24 hours or so, you actually had the ability to trade it. So really at this point, you want to do some due diligence. Do you have your money on a hardware or offline? Is it on an exchange? And if so, if it's on an exchange, what do you want to do? Do you want to trade it immediately? And really at the end of the day, are they going to actually credit you with the possible split?
Okay, so it sounds like I need to do my research on what exchange to get on. Now, is there a certain time frame that I need to get this done before the fork happens?
So for most people, you'll want to make sure that everything is set up about 48 hours in advance, because a lot of these exchanges, if you're using a GDAX for instance, are going to freeze accounts. So if it's something that is going to affect Bitcoin, they're actually going to freeze what you're able to do. You're not going to be able to trade it. You're typically not even going to be able to move it in and out of GDAX. So you really want to sit down, figure out what your particular situation is, and then devise a game plan and have it set up 48 hours in advance.
Okay, so I feel pretty prepared going into it. Now, while the split is happening or the fork is happening, what should I be doing?
So it really depends on your strategy. We kind of follow a threefold strategy depending on your risk tolerance. If you're very risk adverse, you don't really want to potentially lose money on a split for whatever reason, we recommend that you take most of your Bitcoin holdings or even your altcoin holdings, if you do have something like Ether, and actually liquidating that into cash or fiat currency. Some people also do that with Tether, which is actually pegged to the US dollar. In that scenario, let's say you have $10,000 in cryptocurrencies right now. If you're very risk adverse, you don't really want to stay up at night really thinking what's going to happen. We advise you to actually liquidate those assets probably 72 hours in advance to have a lot of cash. And this is why. You can take advantage of the dips. So what tends to happen on any of these runs or these potential splits is there's going to be a pump strategy involved. So what that looks like is you're going to see the price in Bitcoin continually rise we kind of spoke about this earlier, people are going to get excited. They're going to say, well, hey, there might be a potential split, and I can have another coin just credited to me just for holding it. So you're going to see the price actually go up in value because of that point. People actually want to get in to take advantage of the split. But then you have to know when to get out, because after that split occurs, there's going to be a dump in price, because the people that are a little bit more advanced in this space are going to realize that the price is inflated. And at that point, they're going to sell Bitcoin and actually realize those gains. And then you'll probably also see a lot of those things with the split off currency as well. It's going to function a lot like an IPO on the stock exchange. You're going to have people that are getting in on a low price. You're going to have people that want to buy it, and then you're going to see the price go up, and then you're going to see it dip. So if you have the majority of your holdings in fiat currency, you can actually start to buy not only Bitcoin or whatever the crypto asset in question is, and the split off token at a discount. You're going to actually buy it on the dip. The other one would be more of an all-weather strategy, where you're a little bit more diversified. You have about 33% of your money or your assets in the actual currency that's going to be affected. Let's say in this case it's Bitcoin. You have 33% of your money in other coins or altcoins. Let's say it's an Ether, a Litecoin, a Neo, or something like that. Because you're going to see some value rise in those too, because there are people that are going to be uncertain on what's going to happen in the fork. The fork doesn't always guarantee that there's going to be a split or that the value is going to rise. So a lot of people will do this all-weather strategy to make sure that they're covering their bases. If people start moving money into those other coins, you can take advantage of the pump up in price there as well. And then you have another 33% or so in fiat currency. So again, you can buy on those dips and actually take advantage of that. Lastly, would actually be do a really speculative play. So you're actually speculating on the price going up, and you may be fading as it goes in. So fading means that you're buying at 7,500, 7,600, 7,700, and you're trying to actually time when the peak is going to be. Is the peak going to be 8,800? Is it going to be 10,000? And then you want to sell at that point. And then you can fade on the back down, or on the way back down as well. You can fade it. If it was 10,000, you could sell then. Then you can sell more holdings at 9,800, sell more, and then you try to really figure out where the bottom is, and then you buy again. I only really advise that for the most advanced trader and somebody that has a lot of time to actually watch the markets, watch the exchanges, and be able to actually implement those kinds of strategies. So for most people, I'd say the broad group that we're speaking to, I would advise more of that all-weather strategy to make sure that you're covered on all fronts. That's how I would allocate your resources at this point.
Fantastic. Okay, so I feel pretty prepared. So after the fork actually happens and I receive this new currency, what should I do with it?
So for most people, I would ask you the question is, do you believe in whatever the update is? For instance, with Bitcoin Cash, people wanted to see it happen because they wanted to see Bitcoin more widely adopted, used as a form of exchange for me to go into a store and buy a cup of coffee, for instance. If you really believe in it, you could actually just hold on to it because you feel like there's going to be utility in the future, that more people are going to start to use it and you're going to see the value rise over time. For instance, if you had the fiat currency, you could look for a dip. So if you had US dollars, you could look for the dip and actually buy at a lower point. This chart here shows something that happened with Bitcoin Cash. As you see that initial big peak, and then there was a big drop off after the split. It stayed low for a little while, and then you actually see another peak, and then it kind of levels out to where we're looking at, close to today or at the end of September. And so you'll want to look at that. Do you feel it's actual usable? Are people going to actually use it in this new economy? And if you feel like that, then I'd probably just hold it. So if you are trying to time the peak or the maximum value of that currency, it may be difficult to do. It's really hard to actually predict where that is. So you may want to sell out as soon as you can, and then maybe check in a few hours the next day and buy as it's dipped before. So you can do that, and I've advised people to do that in the past as well. It's really just about how engaged you want to be. Do you want to be in it minute for minute, buying in the dips, selling at the highs, or do you want it to be something passive and you're just holding on to it because you feel like there is some utility to the upgrade?
Great. Okay, so we have a few options to choose from going forward. If I would like to find more information, where should I go?
So we do have a website, and we consult and we educate through that. It's ccmutual.com. We have a weekly newsletter there that is actually a compilation of the information that's going out, to everybody in the space right now. It has videos, it has pictures, really a synopsis of what is going on. So for you, I would actually check us out. Check out ccmutual.com, sign up for the newsletter, and hopefully you'll enjoy further reading.
Great. Thank you very much, Richard.